Hi students, this is Srinivas, Assistant Professor from Freshman Engineering from St. Martin Engineering College. Today I would like to discuss about the classification of accounts. Okay, so today we are going to discuss about the classification of accounts. So in the accounting, today we are going to discuss about the classification of accounts. There are two types of classification of accounts. Two types of classification of accounts. Mainly, we can see that personal personal accounts and real accounts, and last one is nominal account. So firstly, classification of accounts is divided into two types. First one is personal accounts, second one is impersonal accounts. So we have taken the real account and nominal account from the impersonal accounts. Why it is called impersonal? Because there are natural factors are there, natural companies are there. Okay, so that's why impersonal accounts. So in personal accounts there are again two types are there. Artificial persons are there, artificial persons are there, natural persons are there. Artificial persons and natural persons are there. So we'll come to natural persons. What are the natural persons we are going to consider in personal accounts? In personal account, again we have to consider here in natural accounts. We'll go to the natural accounts. First of all, the names, personal names, that is individual names we have to consider in personal accounts. So that is what it may be personal names, it may be Ram, Ram's account, it may be Rahim account, it may be normal account, it may be Naresh account. So there are different names and personal names we are going to consider in personal names. What are those artificial names? Artificial names again we are going to consider in the personal accounts. The artificial names are there. What are those artificial names we are going to consider here? Artificial means nothing but companies. We are going to consider artificial companies are generally companies are there. Okay, companies, business, organization we are going to consider. So organizations names, business names, organizations names, business names we are going to consider in the personal accounts. Okay, so that is why it is called artificial personal accounts. Okay, companies, organizations, and any corporation names, any partnership names, partnership companies also we can consider. Okay, the names of the firms, partnership firms also we can consider in the artificial, that is comes under personal accounts. Okay, so here we are going to again we are going to the, that is nominal and real account. So here in the impersonal accounts, again because we are considering the impersonal accounts where real accounts and nominal accounts are there. In the real accounts, what are the real account here? What is real? Here the position, the position, liability, and the it may be property. Okay, we are considering the property and position, liability of the companies. Okay, so these are related to business we are going to consider. It may be any property we are going to dealing with the in the business, or it may be any assets we are going to dealing with, and it may be cash we are going to dealing with. So these are all comes under real accounts. Okay, so real account, it may be cash, related to cash, related to assets, it may be physical assets or fixed assets we are going to consider, and not only fixed assets, we are going to consider the intangible assets. We are going to consider the intangible assets. Intangible assets, what we are going to consider intangible assets? Again, in intangible assets and fixed assets. In fixed assets, again we are going to consider divided into, there are many types. In fixed assets we are using, in the fixed assets we are using assets where it may be physical goods, okay, assets we are procuring from outside, okay, using in our business, like machinery we are using, machinery, tools, techniques we are using, okay, tools and equipments we are using, that we are using for our business, for our organizations, for our manufacturing purpose. Okay, it may be furniture we are using for our business organizations setup, okay, and machines we are using for our plant. Okay, so that's, we are all going to consider these fixed assets which are used for the long run, not only for the okay short run, we are using for the long run. This fixed assets are using. Okay, so that's why we are taking these names, as is we are taking these names. Okay, so here on their accounts we are going to prepare, okay, the machinery account, tool, okay, equipment account, premises, land, building. So these are all comes under fixed assets, land, building, office premises. These are all going to consider in the fixed assets. What are those intangible assets? Again, in intangible assets, we are going to consider copyrights which are registered in our company, okay, and patent rights. We are going to discuss patents which are going to registered, okay, and which are registered in our company. So that we are going to consolidate in our accounts. Okay, in intangible assets here we have not only copyrights and patent rights, okay, so we have patents, copyrights, and not only copyrights and patents. Here we have intellectual property rights, copyrights and patents. Next thing is we are going to discuss about the nominal account. In nominal account, it is also called impersonal accounts. Why it is called impersonal? Which is not personal. Okay, so here we are also going to discuss about the nominal account. Nominal account, what is nominal account? Okay, so here in nominal account, all the expenditures and incomes are recorded. What are those expenditures we are going to consider here? What are those expenditures we are going to consider here? Mainly the expenditures are incurred at the given accounting period. Okay, we have to consider expenditures we have to consider, the losses we have to consider in the nominal account. Nominal accounts where we are recording all the expenses, all the losses, okay, and incomes we are received from the outsiders, okay, and incomes we are receiving from the outsiders, that is, it may be third party, any consultancies, suppliers, any of these persons, we are receiving any incomes, gains from outsiders, we have to record. Okay, that is we are going to consider in the nominal account. So here expenditures, losses, incomes we are going to consider in the classification accounts. Okay, next we are going to consider gains. What are those gains? Gains nothing but profit and loss account. If at all we are getting any profit in the business, we are going to consider as, okay, gains. Okay, so here any subsidies, any grants we are getting from the mainly from the head office, okay, so they are going to give any grants and all, okay, that we are going to consider in the nominal account. in the classification of accounts. So here the classification of accounts here divided into two types. First one is personal account. Okay, what is personal account? Second one is impersonal account. Impersonal account again divided into two types, right? First one is real account. Second one is nominal account. Okay, so first one is real account. Second one is nominal account. In personal account, we have discussed about here. Okay, artificial persons and natural persons. Okay, and representative persons also we can record. Okay, so artificial persons, we have discussed about the artificial persons like company names, organization names, okay, business names like banking institutions, and any partnership firms we are going to discuss. Okay, so here in natural persons we are already discussed about the Rahim's account, okay, and Neeraj Shah account, Naresh account, that we are going to consider as a person, because it may be the person may be involved in the trade transactions. Okay, that's why he is involved. Okay, so where here this impersonal accounts are which are related to business. Okay, impersonal accounts are related to business only. Okay, whereas personal accounts which are related to outsiders. Okay, because it may be related when third party is involving here, when third party person here we are taking into consideration here, because they are involved in the credit transaction. Okay, it may be the supplier, it may be cash transaction. Okay, it may be any credit transactions. Here we are going to consider. So when we are giving any third party persons, when we are paying to third party person, we have to record here, because we are not sometimes we are not recording their names. We have to forget. Okay, so that's why we have to mention their names. When we are paying to something others, we have to mention their names. Okay, so that's why cash and credit transactions are recorded in the personal accounts, right? In nominal accounts and real accounts, which are related to business. The nominal accounts which are expenditures, incomes are gained by our business. Okay, expenditures are mainly expenditures incurred in the business transactions. Okay, and real accounts generally we are we are processing our any assets. Okay, liabilities we are processing. And next thing is in property, and it may be cash transactions we are doing. So it may be sales, we are doing any sales, outside sales. Okay, and next thing is purchasing, we are purchasing any raw material and all, purchasing any machinery we are doing. So that's we are recording to our business, so which are related to our business only. So that's why nominal account, real account, that is which are related to business, right? Next one is rules of the business, rules of the classification of accounts. Here we are going to discuss about the next topic. In the classification of accounts, we have to see that what is the rules pertaining to this classification of accounts. Okay, there are n number of transactions are there. We are going to discuss every day. We are going to discuss about the in a business there are many activities are there. We are going to record on particular names, on particular accounts. Okay, so that we are going to classify here in personal, that real account, nominal account. Okay, so what basis we are going to record here? We have certain rules are there. Okay, certain rules are there pertaining to accounts. Okay, it may be personal account, and it may be real account, it may be nominal account. So every account there will be again corresponding rule is there. Okay, every account, so there is a certain rule is there. So what are those rules we are going to discuss? So personal account rule. What is the personal account rule we are going to discuss here? Personal account rule: debit the receiver, debit the receiver, and credit the giver, Okay, so what is this personal account rule here? How we can analyze here? What we have to analyze here? Okay, so what is debit here? Who is debit? What is to be debited here? We are debiting who is receiving our goods, who is receiving our cash, who is receiving our transactions. Okay, so that's why we are going to discuss the person who is receiving from our business. Okay, any person is there, the person, if it is receiving from the business, if they are receiving from the business, we have to debit. Okay, if the person is giving something to business, we have to credit. If the person is receiving something from our business, we have to debit. Okay, if the person is giving something, what he is giving, okay, who can give? So here persons example, when we are paying to some other persons, when we are going to pay cash, example, we are paying to cash from outsiders, example supplier is there, we are, example, supplier amount is due because he already supplied some goods, okay, which is not covered, okay, the cash is not covered, okay, that's why we are going to pay. The cash is not paid, that is due, we are going to discuss here. That's why we have to consider supplier. So we are paying after a period of time. So after certain days, like the supplier may have given time for the 2 minutes, 2 days, 3 days. Now we are going to give, now we are going to pay the amount. So that's why credit the giver. Okay, that's why he is receiving any amount. He is receiving any amount from our business. That's why we are receiving. The receiver, who is the receiver here? Receiver name is example. Suresh is a receiver. Suresh and company is receiving goods. Example, if it is receiving goods or receiving cash from our business, or receiving, it may be banks. Banks also receive the amount from our business. Example, we are paying to bank. We are issuing. Okay, so next one is, so what is going to comes under real account. Real account, we are going to consider the assets, we are possessing any assets, okay, and we are example paying any cash. So here, what is the rules of real account? First of all, we have to see that the rules of the real account is debit what comes inside, debit what comes inside the business, credit what goes outside. Debit what comes inside the business, credit what goes outside the business. That is the rule of the real account. Credit what goes outside. Okay, that we are going to consider. What goes outside, what goes outside from the business. So generally, what is coming into the business? Debit side. What we have to write? Debit side. So debit side, always we have to write when we are receiving any, like in terms of the purchase, when we are purchasing goods. So purchase goods will come inside. Okay, when we are receiving cash, cash will come inside. When we are receiving cash, we are receiving cash. So that cash will come inside. So that's why we have to consider that in real account, whenever we are receiving cash, we have to debit. When we are receiving any goods, okay, example, we are purchasing goods, so that comes under debits. Okay, what is to be credited here? The credit side, we have to mention that what is credited here, what is going outside generally from the business. So when we are selling our goods, the goods will be going outside. So that's why we have to write the sales. Okay. Next thing is cash. When we are going to pay cash to outsiders, the cash is going to pay. So then definitely we have to mention cash. So this true mainly we consider here in the credit side. So what is going outside? Mainly goods are going outside. Second one is cash is going outside. We are going to consider in the credit side. Okay. So that is all about the real account. So personal account, debit the receiver, credit the giver. Real account, assets and cash we are going to consider, and liabilities, and also we are going to consider. Next thing is nominal account. What is nominal account here? So we are going to consider nominal account mainly expenditures and incomes. Expenditure, what are those expenditures incurred in the business here? Expenditures generally will mention expenditures are there. Every expenditure we are going to consider in the nominal account. What are those expenditures we are going to consider here? Mainly salaries, rent, salary, rent, okay, commission we are going to pay, discount we are going to pay, rent we are going to pay, factory rent we are going to pay, and fees we are going to pay, doctor fees, okay, and consultancy fees, experts fees, training, okay, tours and travels, we are going to consider all these expenditures, okay, and interest we are paying, okay, bad debts we are consider, bad debts which are not paying, so that is also comes under loss. So we are going to discuss, okay, in the, we have to mention in the expenditure side, okay. What are those other expenditures here? We are also expenditures incurred, outstanding expenditures are there, outstanding expenditures we are going to consider, okay, outstanding salaries we are going to consider, okay, these are all comes under expenditure side, okay. So again we have incomes are there. What are those incomes we are going to consider? Incomes are generally we are receiving incomes from the profit and all, we are receiving income from the business, mainly the operations on the business we may get, okay, that may be gross profit, that may be profit and loss. So generally we consider, so here we are going to consider mainly gross profit, one side is there, the income it is already generated from operations, right? So we are going to consider that is, next thing is profit and loss account, that is also there, okay, and next thing is we are going to consider incomes received in the form of commission, income received in the form of commission, income received in the form of discounts, okay, income received in the form of discounts, income received in the form of bank interest, okay, income also received in the form of bank interest we are going to consider, that is also there. So these are all comes under incomes generated not only from the business, okay, outsiders sometimes we are giving to business, they're going to pay, okay, on their income, okay, that's why commission, discount, interest, okay, all those comes under nominal account credit side. So what is the rule here? What is the rule of the nominal account? So we already discussed about the nominal account, all the expenditures and income, right? So now we have to discuss about the nominal account. What is the rule here? Nominal account rule: debit the receiver, debit the debit all expenses. So all expenses we are going to consider in nominal account. All credit all incomes we are going to okay, consider in the nominal account, that are all expenses comes to debit side, okay, incomes we are going to consider, okay, credit side, okay. What are the expenses here? Expenses are rent, okay, commission, incomes, incentives we are giving, okay, discounts we are giving, okay, and debentures we are giving, dividend we are giving, everything, every expenditures we are going to consider in expenditure side, right? Next thing is incomes. We are already discussed about the incomes, right? So commission we are receiving, commission, bank interest, and discounts, all these are comes under nominal account, right? So that's why we in classification of accounts we have, first one is real account, nominal account, and personal account. So that's why we have to consider the classification of accounts mainly three types, right? First one is personal accounts and impersonal accounts. Okay, in personal accounts we are going to consider all the names, artificial names, okay, and natural names we are going to consider. In impersonal accounts, again two types, okay, that is real account and nominal account. In real account we are going to consider all the assets and all the cash, okay, all the positions, all the properties, okay, all the liabilities we are going to consider in the real account, okay. And nominal account, as we know, you know that all the expenditures and losses we are going to consider, and incomes and gains we are going to consider in the nominal account, okay. The rules already discussed in the, okay, earlier, right? Now we are going to give in a PPT presentation, okay. So that is what about the all the so classification accounts mainly two types, for that is personal accounts and real account. In here, in personal accounts, already considered, already explained about these personal accounts. We have artificial person, natural persons. Okay, so impersonal persons here, real accounts and nominal accounts. In accounts, in personal accounts, okay, what is the natural persons, artificial persons account there, and represented personal accounts. What is represented here? Already some of the accounts, outstanding account is there. Okay, salary is outstanding, so that we are representing one account. Okay, that salary is there, so that salary, it is not paid, so that is outstanding, it is called as outstanding, right? So that's why we are calling that representative personal account. It is not discussed earlier because we have to first of all preparing the main accounts. So personal, natural account, artificial accounts. After that, we are going to discuss about the representative personal accounts. We have to, okay, after the recording all the accounts in a particular manner, in particular, okay, table. After that, we are going to discuss. Okay, that's why this will, the personal representative personal accounts will come after the adjustments. Okay, so that's why we are going to record all these representative personal accounts later, right? So that's why next thing is nominal account. Already discussed about nominal account: income, gain, losses and expenses. Okay, next thing we are going to discuss about the personal account. So personal account, already the credit transactions business are carried out. Okay, in a business generally we are paying to individuals. We are going to discuss with the individuals. We are going to consider, so that in the personal accounts. Okay, so those who are paying, it may be Ramesh, okay, and Suresh, so and so. Personal accounts we are going to consider. Real accounts we are going to consider all the financial transactions which are related to, it may be cash, it may be property, it may be any assets, liabilities. We are going to dealing with the real account, right? So in nominal account generally we consider all the expenditures and losses we are going to discuss, right? So that is also we are going to like normal account, all expenses like related to all the which are business, mainly business, considering all the incomes and all, and losses we are going to consider. All these are comes under normal account. Okay, next thing is last one is what already discussed about the that debit and credit. So the rules we are going to consider in the classification accounts. Main thing is personal account, the receiver, okay, and credit. Real account, what comes inside the business and what is going outside the business. Okay, and next thing is in nominal account, all losses and expenditures we are going to consider in the debit side. Okay, so that's why debit all losses, expenditures and losses. Credit side, all we are going to consider all the gains and incomes. Okay, so that's all about the. So that's why types of accounts: personal account, real account, nominal account, when to debit, when to credit. Okay, so we should write whenever we are receiving something. So from the business, okay, any person is receiving from the business, so we have to debit. When the person is receiving, when the person is giving something to business, that we have to credit. Okay, that's why we have mentioned clearly, right? Okay, next real account we are going to consider all. So what is coming into the business we are going to consider, like it may be assets, okay, goods and assets we are going to, whenever processing, like in terms of the purchasing the goods we are going to consider, right? So that's why all the debit side we are going to consider all the purchase goods and okay, assets we are going to consider. Next thing is accounts when we are, okay, going outside, okay, that is we are going to credit. Accounts which are going, like it may be assets, it may be goods, okay, sometimes cash is going outside, we have to consider credit side. So that's why in nominal account also, so we have to see that what is the rule here. Accounts of expenses are, okay, losses we are going to debit side, and losses, incomes and also incomes and gains that we are going to consider in credit side. So that's why again in a video representation I'm going to give that. In a video representation, so we have video representation of the classification of accounts. So that's why in classification accounts, so we have Classification accounts, there is a classification everything in accounting. Okay, so classifying transactions. Okay, and accounts, personal account, impersonal account, real account, nominal account. Accounts classified into these categories. Okay, personal accounts, we can see persons are involving here and business people are involving here. Okay, and all these accounts are payable account, receivable also we are considering here. In impersonal accounts generally, okay, people are there in the outside people, and nominal accounts are there, that is impersonal accounts, nothing but real account, nominal account. Okay, that we are going to consider, right? So that's why classification accounts mainly, okay, accounts which are going to consider in all the business activities, right? Thank you.